Hi, good afternoon. This is Bill Ulivieri, the blockchain advisor here at the Voice of Blockchain in Chicago. We're here with the crypto tax girl.
Hey!
And we're just going to do a quick 10-minute block time, episode 2. And so we're just going to do some informal interviews and ask crypto tax girl how it was that she got into this space and how do you make accounting sexy again?
Oh yeah, that's the trick. So I got into crypto, I was in college, I took a course where my professor was obsessed with crypto. He was always talking about it. We had to write a paper about Bitcoin. And then I just kind of forgot about it for a while, and then I started dating my husband, and he loved crypto. Him and his dad were into mining and other things. And so then I just kind of got into it through them. And then we were doing our own personal taxes after we got married, and we had Bitcoin.
You mean you?
Me, yeah, I was doing the taxes, that's true. And so I was doing our taxes and found that the tax laws weren't exactly what I expected them to be. And so by doing that, started reading the tax code, learning a lot more about it, and so I did our own taxes, then I started doing it for our friends, for our family. I started my Twitter, and now the crypto tax girl.
And so how many Twitter followers do you have now?
Right now I have about 11,000 followers.
That is crazy,
yeah.
11,000.
Apparently that many people are interested in taxes.
I know. Well, I went from maybe 300 to about 600 now.
Oh,
and
nice.
I'm thrilled. And this is like in the last 3 months, but 11,000 is something I can only hope to dream for.
Yeah, I only started like 6 months ago, so it's been growing a lot faster than I thought. It shows that there's a need. I think a lot of people are realizing now that they do need to pay their taxes, and the tax laws aren't exactly what they thought they were going to be.
Right. So let me ask you this question. What would you say, is there a common theme in the way people are neglecting or not doing their taxes? Is it like either or?
Yeah.
Like you find people like, well, I'm not paying my taxes, I'm not giving the man my money, or is it like, well, I want to, but it's just too technically hard, and how do I keep track of it?
Yeah, I think a lot of people were under the impression that they only owed taxes if they sold for US dollars or other fiat. And so actually, every trade that you do is taxable. So if you trade Bitcoin to Ethereum or Ethereum to Likekind, any coins that you trade, if they go up in value, that's a taxable event. Obviously if they go down as well, but it's a loss. And so a lot of people didn't think about that, and they only thought about when they pulled out to US dollars. And so I'd say the common theme is everyone's like, oh, I'm not reporting unless I pulled out. And I guess that's like the first step, but that still leaves out a lot of those trades and a lot of those taxable events. And so it might come, I don't know, you might be able to get away with it, but it also might come back to bite you later.
That's right.
And if you do, that'll be a lot of interest and penalties.
And I think it was, we're trying to figure out this space. I mean, it was 2 years ago where people believed that crypto to crypto exchange was like a 1035 exchange, like in
1031,
1031.
Yeah. Mm-hmm.
And so there would be no taxable event, but in fact there is.
Yeah, I think no one has ever heard of Likekind exchanges until this year, because they read it in the Forbes article that talked about Likekind exchanges, and they think that they can actually do Likekind exchanges. And I have not met a CPA yet that actually is okay with filing crypto as a Likekind exchange, and neither am I. But I've met a lot of people that are like, oh, I just didn't report any of those in 2017 because the Likekind exchange. But the thing is, if you are going to take the Likekind exchange, which in my opinion is quite an aggressive tax position, you have to report that on your tax return, disclose that you're taking the 1031 position, and for every single trade that you do, so Bitcoin to Ethereum, Ethereum to Litecoin, let's say you have 1,000 transactions, you have to file a form for every single trade indicating that you're taking the Likekind position. So it's a lot of work, and it's a very risky position. So if you just said, I just didn't report those because I took Likekind, you didn't really take Likekind, you just did not pay your taxes.
Exactly. So so I go to a lot of networking events, predominantly from CPAs, and the catchphrase is, you always pay for good accounting one way or another.
That's probably true.
So I'm sure that you've all taken shortcuts in hiring accountants and getting that work done. So in terms of you going forward, would you say you're more interested in working with retail clients, individual mom and pops who are experimenting into Bitcoin and cryptos, or would you say that your interest lies more on a corporate level, like maybe you'd want to work for a hedge fund or a trading firm, like something along those lines?
I like working with individual traders most, because I like doing individual taxes, and those type of people, they're usually traders, they've done a lot of trades, they don't know how to keep track of things, and so I just like being there to help them out and teach them, help them make better decisions so that they can manage their money better and like plan, be compliant, but also make good decisions with their taxes and their crypto.
Good.
Yeah.
And so, questions I usually like to ask people are not related to cryptocurrency. So
Okay.
it'd be kind of like, if you won the lottery, 50 million, 100 million, just pick a number, and money was no object, what would you do with your life?
Oh man, that's a good question. I do actually really enjoy taxes, and so I probably would still do that. I tried leaving taxes a few times. I worked at Ernst & Young. I tried to leave, but it only lasted a few months, and then I missed it, and I was back into taxes. So I think in some way or another I would still be involved, but I really like traveling. I mean, everyone does, but I think I would go and just travel and meet new people and like teach them about taxes all over the world.
Okay. And if you were on a deserted island and you could only take 2 books with you, neither one of them being the Internal Revenue Code.
Oh, I don't want that.
what books would you bring? Like, what do you read for fun or on your spare time? How do you unwind? Are you binge watching?
Yeah, I mean, as far as not reading, but as far as watching, I always love watching The Bachelor, which is my guilty pleasure.
Okay.
But for reading, I love like any sort of like mystery books, like that, just like our major page turners. Like recently I read Big Little Lies and it was amazing.
Okay.
I really loved it. I would read it again. And I'm reading Small Great Things right now and it's amazing. And I just finished another one that was a good, like, there's so many good books out there right now that I just keep reading them all.
So I'm beginning to sense a theme here where you enjoy doing the accounting, you enjoy doing taxes, you probably have this sense of joy in some respects, satisfaction in balancing to zero or getting things done. And on the mystery side, you are given this puzzle, right? And you have to try to solve who the whodunit was.
That's true. In crypto, literally 99% of my time, it's putting together a puzzle of people's transactions and trying to figure out where everything went and where it went and where it came from.
Now, are people contacting you from outside the state of Utah, from where you're from?
Yeah.
And you have to dig into the state tax code in order to do their taxes, or is this like
state tax code isn't too complex. So I mean, it's mostly the IRS, and then the state tax code is usually just you just apply a different percentage to the numbers you already calculated. The tax laws are basically the same, but yeah, I actually don't have any clients in Utah besides like a few friends and family. Most of my clients are just all over the U.S.
Okay.
I've won in almost every state now.
And would you really?
Yeah.
Oh, that's terrific. Now, are there any de minimis laws for accounting?
No, unfortunately. They have proposed it a few times, but nothing's gone through. They proposed one recently that was anything under $600 was just, you don't have to report the capital gain. It hasn't gone through, so nothing has come out new from the IRS since 2014, and crypto has changed a lot since 2014. So all these new things like masternodes and staking and airdrops, like none of that, ICOs, like none of those are really around in 2014, and if they are, they weren't well known enough to get a tax law written about them.
Well, let me ask you this question then. You talked about masternodes. That's really interesting. So if someone, so if you own a masternode and you're receiving tokens little by little from the transactions, do you have to pay? Okay, let me say this. All right, I'm going to go back.
Okay.
All right. So you say, for example, you're mining cryptocurrency.
Yeah.
And you have you're mining on a cryptocurrency pool.
Okay.
And the user gets to select how many tokens are in the pool before they're released. So I can say I want to receive a payment every 0.2 Ethereum or 1 Ethereum. That's what makes the distribution, and I receive it. But until then, I just see this balance build up in the pool. How is the tax law looking at that? Because I could set it to like 1 million, and I'll just mine cryptocurrency for the rest of my life, and I'll get a distribution on my deathbed.
Yeah.
How is that going to look?
So we actually do have tax law on mining. That was part of the 2014 tax law. And it says that the day that you receive the coins, the day that it's successfully mined is when you should include it as income. So
the day it's successful, but I'm receiving little pieces of dust every second.
Exactly. So you have to take all those little pieces of dust.
The front door.
So if you have the wallet address that those dust go into, you can actually integrate it into a lot of different softwares, and it'll look up the value of the dust every day and add it up for you, so that you just have the running total. Because yeah, it sucks, but that's what it is. And the same with masternodes actually. So it says in the tax code it mentioned mining, but it also says or using computer resources to retrieve coins, which is a masternode or staking. So they're treated the same way. So if you receive coins from masternodes, let's say you receive some Dash or whatever, then maybe it's worth $50 today. You put down $50, and then maybe you don't sell it for 4 more years, and it's worth $1,000. Then you would have a second capital gain, but you recognize the income now, even if you don't cash out.
So one of the reasons why I don't do taxes, right? You gotta hire people. Anything else you want to say? I mean, is your Twitter followers? I mean, are you doing a YouTube channel? Are you like how else?
I have
do you
so
get
many
your
ideas
clients?
of things I want to do, but I just don't have enough time. So I actually spend the majority of my time just calculating taxes and tweeting.
Sure.
So I tweet out free tax tips if anyone wants to follow.
And I do appreciate that. What's your Twitter handle?
A crypto tax girl. It's easy to remember. If you want to email me, cryptotaxgirl@gmail.com. Anything, you can find me at Crypto Tax Girl.
Excellent.
And I can just answer any crypto tax questions you have. If you really want to learn it yourself, I have a crypto tax course that just teaches you. It's like, even though right now it's August, it's not tax season, it's important to still learn the tax law so you have it in the back of your mind, so that with every trade you think, how is this going to impact me from taxes? Like, maybe I'm making $100 off this trade, but how much am I really making after taxes? And
I know what I was going to ask you. So now that we've had a bear market in crypto since January until now, it's end of August, we know that we can only carry forward $3,000 of losses from one year to the next. Do you anticipate a lot of people contacting you saying, hey, I've offset my long-term and short-term capital gains, I'm out 20 grand, what do I do now? I now have to carry it against my ordinary income, $3,000 a year for the next...
That is what it is. So if that was the case, if you had a net $20,000 loss, you would put it on your tax return. You could only deduct $3,000 this year. The $17,000 would go forward. But I mean, if you're in crypto, hopefully, like me, you're hoping that it's going to go up.
Right.
And so maybe by December it still hasn't gone up, but maybe January, February, maybe next year, then it'll go up, and you'll have $17,000 basically sitting there. So your first $17,000 of gains will be completely tax-free because you'll offset it. So it sucks that you can't really balance it out perfectly throughout the year, but hopefully in the long term, big picture, hopefully we're in crypto for the long term, and it'll all just like balance out eventually.
That's excellent. Well, thank you so much for your time. This is Bill Ulivieri, the blockchain advisor with Crypto Tax Girl with the voice of blockchain.